And the recording is on. Okay, welcome everyone. It's Marcel here. And as usual, this will be the backtesting session of actually last week because it's Monday and I would have hosted this session yesterday on Sunday. But you know, I couldn't host it because I did not arrive home in time. So I will just host it today and we will backtest a random day. And actually, my idea was that what if that we are not backtesting days from this region, because price action at this region, as I said in the pre-week analysis video, is just a whole mess, right? Yes, it's 11:45. Yeah. As I said, most of you guys are having actually sleep time or spending time with family, so, but that's all right. But sorry, I was just thinking that what if I'm not hosting a backtesting session about this price action region, because as I explained it in the pre-week analysis, this region is just a whole mess, the whole range, and it's literally untradeable and shit. And I was just thinking like that I will backtest today from July 20th, actually not 19th, 20 will be good. So from this day back to a month, for example, starting from June 20th. So yeah, I will choose a day between the 20th of June and the 20th of July in this time period, and we'll just leave out this region because it's unreadable. As you can see, it's much cleaner to backtest any of the days from this region than just backtesting this whole range. Okay, so let me just open up random number generator on my phone. Just a minute, please. All right, random number generator from 1 to 31. All right, 10. So it's a 10. Let me just open calendar. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, 29th of June. So let me just switch to the 1 hour time frame. And 22, 30, 29. Here's the 29th of June. Where is it? Replay 30, 29, and I will replay it 1 hour before New York starts. So here, okay. And yeah, I will just delete everything else from this region because it's annoying. Okay, delete. Perfect. So let me just start, and I may delete this too because it's just ugly. So once again, welcome everyone, it's Marcel here. In this session, we will backtest a random day, and this day will be the 29th of June. As I can see it, right? Yeah, it's the 29th of June. Okay, first question. Yeah, let me just clarify something before the start of the session, that if I'm asking a question, and if you'd like to answer for this question, please just raise your hand, and if you're raising your hand, I will ask you to actually answer the question. And yeah, let's see the first question. What are we doing before every single backtesting session? It's been a while since I hosted a backtesting session, so I will ask this, but what are we doing before we start a backtesting session? If you raise your hand, you can answer the question. And it was Kaizen.
Check the news.
Exactly, man. Thank you. Before every single live trading session, backtesting session, case study session, or any trading session, trading related thing you do, you have to check the news. So here's the forexfactory.com. As you know, we always check news on forexfactory.com because actually this is the most relevant news provider company. And I just don't trust investing.com because that investing.com can actually show lots of false news, false high impact news, which aren't actually high impact news, but investing.com showing that that's a high impact news. And I'm just trusting forexfactory.com because every single high impact news here will be really high impact and it will have an impact on charts. So that's why we call it high impact, because it will have a high impact on charts. And every single forexfactory.com news will have a high impact on the charts. So which day was it? Sorry, let me just check again. 29th of June. Actually, let me just check. Can I have a 1 minute backtesting data? Yes, I can. Okay. So June 29. Here it is. From June 29. Apply settings. Alrighty. So Wednesday. This is a Wednesday. Perfect. And as you can see, we have a high impact news right here 3 p.m. Yeah, which actually will be released after this session, so we don't really have to care about this. Let me just switch back to the chart. So actually there's OPEC meetings all day long, but these meetings aren't really having much impact on charts. These are just getting released minute by minute, hour by hour, and you can't really know when will it hit, but these aren't having that much of an impact on charts, for example, like NFP. So let's just start the backtesting on the 4-hour chart first. And what about my Forex book? I'm just using, forexfactory.com because that's the most relevant. I just only care about this because every single new right here will have an impact on charts. But expect these all-day news, because basically these all-day news aren't having that much of an impact because these are all-day news getting released hour by hour, minute by minute, and yeah. So back to the chart. As you know, we always start the backtesting session on the 4-hour chart, and after that we are dropping down to the 15-minute chart, after that we are dropping down to the 5-minute, and after that we are dropping down to the 1-minute. We always do this, right? Before every single live trading session, backtesting session, etc., etc., etc. So let's just start. What can we see on the 4-hour chart if I zoom out? Let's just start with the bigger picture. Yeah, that's not really surprising that Euro USD is bearish, right? So the bigger picture, so the daily chart, the weekly chart, every single higher time frame chart is showing us an extremely bearish pressure, and price is just following this pattern over and over again. And if you take a closer look, we'll see that at this region, for example, at this price action region, price is just following the same pattern. What am I doing? Delete. Wait. What am I doing? All right, never mind. So price is just following the same pattern over and over again, right? So reacting on supply zones, sweeping liquidity into a supply zone, reacting on supply, coming down, sweeping liquidity or creating liquidity, some supply tap right here, coming down, creating a liquidity right here, creating. Why is it reversed? What's happening? Why can I undo my charts? Guys, do you know what's happening? This is actually pretty strange. I can't undo my drawings. I draw here, as you can see, and I just want to undo it, and it won't undo it. Do you know what's happening? What could this be? Okay, if you know, please just write it down in the chat. I really don't know what this is, but let me just continue. So, as you can see, price is just following the same pattern over and over again. It's basically creating downside movements, breaking through demand zones, creating liquidity zones, sweeping this liquidity into supply zones, creating another breaking movements, creating liquidity, sweeping this liquidity into supply zone, and price is just basically following this pattern over and over again. Maybe just reload trading you. Yeah, let me just try. Sorry for your time, guys. Okay, it's working now. Perfect. And I have to replay chart. Sorry for your time, please. Bear with me. Bear with me, guys. We'll be there soon. Which day am I looking for? 29, July 20, 30, 29. Here. All right. Now we are starting it. It's working. Let me just check it again. Yeah, it's working. Perfect, guys. So, as you can see, price is just following the same pattern over and over and over again, creating a huge bearish movements to the downside, creating liquidity sweeps, creating supply taps, creating continuations. So the overall higher time frame structure for us is bearish, right? So price just did the same right here, created this liquidity line, spread this liquidity into the supply zone, created change of character, continue the downside, reacting on a weak low point. This is a weak low point because it couldn't break up the last high point, right? This is a weak low. It couldn't break up the last recent high point. After this, price just recently tapped this demand zone, reacted on this demand zone, created a rejection low point, which is basically liquidity for the upcoming shorts once again, because price is just following the same pattern over and over again, reacting on weak points here, creating a liquidity, breaking through liquidity, sweeping liquidity, reacting on weak points, creating rejection low points, liquidity, sweep of that liquidity, continuation over and over and over again. This is how the structure looks like. We know this already. So here was the weekly low point, and price just mitigated this low point, rejection, liquidity for the upcoming shorts, right? So this is liquidity to take on the higher time frame. It's not June. It's June. It's June, right? Yeah, this is June. June 29th. It's correct. So, tapping into weak low points, what do we know about weak low points? Every single weak low tap will be basically liquidity, right? Because price is just collecting liquidity on these weak low points. And what can we see here? After a weak low point reaction, price has just created a rejection low point, created a bullish order flow to the upside. And after it created a bullish order flow, let me just analyze this region. Or actually, I want you to analyze this region. If you raise your hand, you can draw the last recent supplies on liquid lines, etc. That price just recently did at this region. So please raise your hand. Kaizen. Exactly, there's the supply zone. Perfect, thank you for marking it out. I will just move it here. What else can we see here at this region? Perfect, thank you very much. There was the liquidity, right? So here's double taps and this liquidity. What has happened with this liquidity? Thank you. Very good. Very good. Thank you for your answers. Thank you. Perfect. Perfect. Thank you, Kaizen. So, as you can see, Kaizen just drew the scenarios that happened. But technically, price just mitigated this low point. Price mitigated this demand zone, this weak demand zone, weak low point, created a rejection low point, and after a rejection low point, price just built up a bullish order flow up to this supply zone. After this bullish order flow, price just built up double taps below this last recent valuable supply zone, because this is the last recent valuable supply zone for us. There was lots of inefficiency here that has been created by this supply zone. And here was the double taps. These double taps have been swept into this supply zone, right? With this movement. So the liquidity has been swept and the immediate reversal has happened. Technically, this was a V-shaped recovery, more likely on the daily chart. So more likely this is daily liquidity. Let me just check it. Yeah, this could be considered as daily liquidity too. And on the daily chart, as you can see, after the sweep of this liquidity, price just created an immediate V-shaped recovery to the downside. So sweep, tap, not even close inside of this supply, and reversal with huge downside movements. Okay. So this is what you can see on the higher time frame, the daily chart and the 4-hour chart. But if you analyze this region right here, we'll see other things too. Price has changed character on several places, right? Technically, price has changed character here, and here. But there's a problem with this change of characters. There's a problem with this change of characters, that these change of characters are technically sub-change of characters. Why? Because here's the last recent low point and here's the last recent high point. This high point has not been broken with body closures. So technically, price is inside of this range, inside of this 4-hour and daily low point, and inside of this 4-hour/daily high point. It's just ranging inside of this low and high point. But just using the range concept, it works on every single time frame. If you are using the range concept, price has just created an upside range, right? Upside range has been swept. And price is on the way down to sweep the downside range too, because as Kaizen marked it, here was a downside liquidity. Here's a perfect downside liquidity, right? This liquidity have been built up for the upcoming shorts. So price has just swept the upside liquidity, tapped the supply zone, and after the sweep and the tap, it just reversed to the downside, and it's on the way down to sweep this downside liquidity too. So technically, price has a really high chance to sweep the downside liquidity too, and after the downside liquidity to create an upside movement, react on the last recent supply zone, and continue its way down to the actual break of structure, break of the last weak low point, right? Because this is still a weak low point because it couldn't break above this supply zone. So technically, we have two weak low points. Both of these two weak low points are considering and being functioning as liquidity. So this is low point. This is a weak low point because it couldn't break above this supply zone. This is a weak low point because it couldn't break above this supply zone. This was a daily. This was a 4-hour supply zone. So this is liquidity. This is liquidity for the long-term shorts, for the break of this swing structure, this weak low structure. And this is liquidity for the range. And the first target point will be this. Sorry, let me just delete. So the first target point will be this liquidity line, actually the less recent or next recent unmitigated zone below this liquidity, which is this one right here. As you can see, this is the less recent demand zone that can be found below this liquidity. So this could be the first, of course, swing target point, because let's just assume that we are executing a trade at this region here with 2 pip stop loss, targeting this demand zone could be 1 to 100 or 150 pips, I mean, risk ratio position. So we are not holding trades for 100 for 100 and 150 risk-reward ratio. So we're just closing partials or full TPs on liquidity points, etc., 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 or on even lower time frame liquidity points or lower time frame 50-minute demand zones, supply zones, etc., etc. But the higher time frame looks like that it will sweep the downside liquidity too, and after the downside liquidity, it will come up to the supply zone more likely. So price doesn't have to necessarily come back up to this supply zone, this 4-hour supply zone, because I believe price will come up to the supply zone if it sweeps the downside liquidity. After a downside liquidity sweep, it can come up to the supply and create the actual range sweeping concept scenario, right? Because here's the range, upside is getting swept, downside is getting swept, return to the last recent supply zone. This is our range sweeping concept looks like. And this is exactly the range sweeping concept, upside range, downside range, sweep, sweep, come back. This is the supply zone right here, continuation. So if you'll be able to find good entry points on the lower time frame, for example, on the 15-minute chart, some 15-minute supply reactions, or right here, I don't know where that 15-minute supply will be. So if you can find a good reaction of 15-minute supply points, we'll be able to take shorts to the downside, because the overall main trend on the 4-hour time frame and the higher time frame, it's unarguably bearish, right? So this is our main trend. Let me just switch down to the no. Let me just analyze this region. Actually, there's no demand reaction right here, or actually there's no clear demand reaction on the 4-hour chart, right? So there's no demand zone can be found here. Okay, so let me just switch to the 15-minute chart and let's see what's happening currently on the 15-minute chart. Here was the liquidity sweep. As you can see, here was the perfect liquidity sweep of this liquidity, mitigation of the supply, reversal. And this was actually a perfect entry opportunity right here, or could have been a perfect entry opportunity in London session, because here was liquidity built up. This liquidity has been swept with this candle, and more likely there was a 1-minute confirmation, as you can see here, and the continuation to the downside. So, but we don't care about this region because we are not trading London. Currently, we are trading and backtesting New York. So after this huge downside movement, price will just continue the way down and create another break of structure, because let me just analyze this region. Yeah, here was this huge downside push coming from this 4-hour supply zone after the liquidity sweep, after the supply mitigation here, downside push. As you can see, after this price, I just printed another supply zone here at this region, and this supply zone is really far away from the current price action, but it has liquidity below it. Here's liquidity, as you can see, but this is really far away. So price has to move actually 50 pips to come up to the supply, or even if we are counting from this point, it has to come up 65 pips to come up to the supply. So I believe this pullback to the supply won't happen in this session. This is a really low chance to happen, but it can happen after deeper demand mitigation, for example. And here's this 4-hour demand. So this could happen after this 4-hour demand mitigation, but let's just stick to the 15-minute chart and extend these zones for, bear with me. Okay, what else can we see? That after this huge downside push, here was a break of structure to the downside, right? Here's a clear break of structure. Technically, the order flow, the structure breaking order flow started from this supply zone up here. And if I extend this supply zone, you will see that price is reacting on this supply zone perfectly. And it didn't close above this supply. So price just closed inside of this supply zone and swept some liquidity from over this supply. If I switch down to the 5-minute or the 1-minute chart, I will see it better. But here was liquidity sweep. As you can see, here's the liquidity. Here's perfect liquidity that has been swept with this movement. So liquidation has happened here. Price has swept liquidity from over the supply and reversed the downside immediately. But let me just switch back to the 15-minute chart. We will talk about the 5-minute and 1-minute later. I just marked out the liquidity point. So here was the liquidity that has been swept by this 15-minute candle, and the candle has closed inside of this supply. So we already know these liquidity sweeping scenarios, that if price sweeps liquidity from above a supply zone, for example, if it's a 15-minute liquidity or a higher time frame liquidity, or even if it's a 1-minute liquidity, and price sweeps the liquidity from about the 15-minute zone and closes inside of this zone, we'll be able to look for short continuations in a supply scenario. But if it's a demand zone, for example, and there's double bottoms inside of this demand zone, price sweeps this liquidity, but the candle closes inside. I mean, here's the inside. Candle closes inside of this demand zone, but sweeps the liquidity with the wick, then we can expect continuations to the upside. So we already know these scenarios because I told you these scenarios already, but I'm just telling you that what I'm seeing. Trips, why did you raise your hand, please?
Yeah, I have a question to ask regarding the liquidity.
Yeah, be quick, please.
Yeah. All right. Yeah. So, why didn't you look at the liquidity that came from this side? Why did you choose this side again?
As I said, here's liquidity too. As I marked it,
Oh,
when I started the 50-minute analysis, I said that here's liquidity too. I'm just analyzing this current region. But of course, price is printed more liquidity. Price is printed more liquidity. Here's more liquidity, of course. But it seems like the price has swept this liquidity, this lower time frame liquidity, and after liquidity sweep it reverse to the downside. So it doesn't have to necessarily sweep this liquidity to the upside too, because it swept enough amount of liquidity from above this supply to reverse to the downside. So this liquidity will more likely be here for after a demand mitigation, and this liquidity will be the fuel or liquidity to take, or I mean, sorry, liquidity to target, for example, after demand mitigation. So if this 4-hour zone is being mitigated, more likely after a reversal, this liquidity will be here, and this liquidity will be swept after the demand mitigation, and this will be the liquidity to target for us, you know, because we have this same concept that liquidity to take, liquidity to target.
okay.
Not every liquidity will be swept immediately. Everything has a reason. Every liquidity has a reason. And if price sweeps liquidity, so the liquidation happens here, and it reverses to the downside, more likely it won't come up to sweep the another side of the liquidity or more liquidity, because it have enough power to reverse to the downside, and it doesn't have to collect more liquidity. So this liquidity will be functioning as the liquidity to take for longs. Hope it makes sense. Okay. Got it. Perfect. So let me just place a marker here. Let me just place a marker here. And let's see that price mitigated the demand zone here. As you can see, because this is the lowest point, and this lowest point has mitigated the demand zone here at this region. I will just actually mark it, or I don't have to mark it. We know that price has mitigated the demand zone here at this reversal. So price is technically coming from a demand zone after this reversal. Okay. What else can we see? That technically this is liquidity. As you can see, here's this higher time frame liquidity. Huge liquidity line can be found here. And this is huge liquidity line which has been swept. But with this movement, price has just created double bottom. So technically this is liquidity for the upcoming shorts once again. Yeah, lots of liquidity to take, lots of liquidity to target, because all of these movements are liquidity to target for the demand zone, because the order flow have been shifted from this 4-hour supply tab. 15-minute turn into bearish, 1-minute turn into bearish, 5-minute, and every single time frame turn into bearish, right? So, and overall, the higher time frame order flow is bearish too. So these are functioning as liquidity to target for us down to this demand zone. But let me just zoom back in, and let's see what has happened on the closer outlook of the 15-minute. So price has just changed character here to the upside, right? So we know already that here was a demand tap. This was a demand tap. And we can see that price has actually changed character here to the upside and started the pullbacky order flow, bullish order flow up to this supply zone. Whereafter this supply has been tapped and liquidity has been swept from above this supply, and price has just changed character to the downside again on the 15-minute chart. Not with this one, this one. So here was a change of character to the downside after the sweep of the liquidity on the 15-minute chart even, right? So this is a really, really strong change of character here. Why? Because this is the 15-minute zone. So 15-minute zone requires 1-minute change of character. And if price can change character on the 15-minute chart after a 15-minute zone tap, that will be a really strong change of character for us. And of course, if you are combining this with the structure, which is extremely bearish, this will be the perfect setup, perfect opportunity for us to look for shorts. But let me just take a look at this region. I will just mark this demand out, which has caused a change of character here to the upside. Here's the character changing movement that has been caused by this demand zone. And just don't forget that this demand, let me just delete this from here. Just don't forget that this demand has actually changed character to the upside. So if price, for example, reacts on this demand zone, we'll have a chance to see long opportunities to the upside. But don't rush. Let me just mark all of the possible scenarios on the 15-minute chart that could happen to us. So possible scenarios. For example, price changes character here, which has happened, right? After the character changing movement, price returns to some supply zone, creates some good entry opportunity on supply zone, and we'll be able to target this demand zone with our shorts. Because, as you can see, we have more liquidity to target here. These are double bottoms, or liquidity trend line can be called as liquidity trend line above this demand zone. So this is liquidity to take, liquidity to target for us, right? For the shorts. So if there will be a good short opportunity, we'll be able to take shorts down to this demand zone. After a demand tap, we have two scenarios. First scenario, if price changes character to the upside, which have actually least probability than the break of this demand. But if some miracle happens and price changes character on this demand zone, we'll be able to take longs up to this liquidity region. We'll be able to target this liquidity. If price reacts on this demand, we'll be able to target this liquidity. And if price, of course, reacts on this demand zone, then this high point will be weak too, and this will be liquidity too. And after price takes this liquidity and sweeps this liquidity, the reversal can happen to the downside again, and this will be targeted once again. And the main order flow can be continued, because if this liquidity, this amount of liquidity here isn't enough for the reversal and to break off this demand zone, the more likely price, and I'm saying this to you, trips, to have a better understanding. So if this amount of liquidity isn't enough for price to break below this demand zone, the more likely it will reverse on this demand and come up to collect this upside liquidity, this more liquidity. And after the collection of this liquidity, it can reverse to the downside and break the actual structure. So we will see, but we'll be able to take shorts down to this demand zone. After the demand mitigation happens here, we have two scenarios, as I said. The first scenario, if price reacts on it, changes character, we are targeting this liquidity. Second scenario, if price reacts on this demand, flips this demand, we'll be able to take shorts to the downside. Okay. So that's the 15-minute outlook. That's the 15-minute outlook. Let me just switch to the 5-minute chart and see what's happening right here. We have a perfect supply zone at this region, 5-minute supply zone, as you can see. And price is currently inside of this supply zone. And mitigated the 50% of the supply, of course. Let me just mark it. All right. So character changing movement has happened even on the 50-minute, even on the 5-minute, as you can see here. And price isn't coming from the opposite sided zone. So price didn't mitigate this demand zone even. There was not even a tap of this demand zone, as you can see. There's an extreme 5-minute too. Yeah, there's an extreme, but this extreme is heavily part of the liquidity. So more likely if this extreme is being tapped, then the sweep will happen to the upside. But if price reacts on this zone, then more likely this sweep won't happen, because this is just part of the liquidity, and if it's part of the liquidity, the sweep has a really high chance to happen. If the decision zone isn't part of the liquidity, and the sweep has a much lower chance to happen. Hope it makes sense. So here's the liquidity target for us. As you can see, even this low point is the part of the liquidity. And don't forget that our main trend on every single time frame is bearish. So our main trend, our main focus is on shorts, right? Our first TP will be this demand zone down. All right. So let me just switch to the 1-minute chart and start the actual session. But let me just see the chat and open the chat in a bigger picture. Okay, that was so important. No, I did it. Okay, perfect. I'm happy to help chilling markets. So can we just start this session on the 1-minute chart and take the trades too? And yeah, guys, in this session, we will actually track the criteria with the trading plan, because it will be much easier for you to understand the criteria with the trading plan planner than without the trading plan planner. So let me just start it, okay? Session will start. Actually, session has opened. And here's the first movement of the session. Prices reacted on this supply zone. And yet it didn't close above the supply, but it created a liquidity. Okay, price has just created a liquidity here, as you can see, inside of this supply zone. Perfect liquidity. And this liquidity is leading up to the extreme supply. So more likely the extreme supply looks like this. Let me just switch back. This is the extreme supply above the decisional one. And price just created liquidity inside of this supply zone. So we can actually expect a deeper mitigation. So for example, if price changes character here to the downside, because as you can see, here was the 5-minute and 15-minute change of character started from this supply zone, right? So this character changing movement, this character changing movement has been started from this extreme supply zone, and this is a decisional supply zone. And after this character changing movement, price has just changed character here to the upside. But if price breaks below this low point here, this is the less recent structural low point, right? Price is coming down, created a change of character, created an upside structure. So if price creates a change of character here to the downside, more likely this will be a sell trap. And if price breaks below this low point, it will come up to sweep this liquidity to the upside, right? And this liquidity will be swept into this supply region. But inside of the supply region, we need a confirmation once again. Why? Why do we need a confirmation inside of this supply? And why can't we just set a direct limit order on this supply zone, for example, after the liquidity sweep? If you raise your hand, you can answer the question. Kaizen, please.
Is the lunchtime?
Yeah, exactly. This is a lunchtime zone. This 1 minute zone is a lunchtime zone. So we can set a direct limit order on this lunchtime zone because, as you know, every single lunchtime zone has a really high chance to be broken. And we can only take lunchtime zone trades if we confirm the lunchtime zone. So, for example, if price taps the lunchtime zone, mitigates the lunchtime zone, and creates a change of character on this lunchtime, then we're able to take a trade based on this new supply zone because the lunchtime zone is being confirmed. But you can't directly set limit orders on lunchtime zones. This is really, really important, and I have to say this in every single session. So, more likely, yeah, there's a change of character, and the change of character has started from some sort of supply zone here. I won't even mark it because this is part of the liquidity, and more likely this will be a sell trap for this extreme zone. But if price comes up to this extreme zone, then there's a high chance that the sweep to the upside will happen. So we have to see. We have to monitor the market. Okay. That's actually a huge movement to the downside. Okay, that's actually one more huge movement. And here's a demand reaction. So price has just actually changed character to the upside, or it's on the way up to change the character to the upside because it was reacting on this demand zone, right? So here's this demand reaction, and this demand reaction, what do we know about this demand reaction? This demand reaction is here to create a pullback to some higher supply region because the pro order flow is still bearish, right? So this demand will function as liquidity collecting demand. And if price changes character to the upside, more likely the order flow will be continued up to the supply zone. And after the order flow being continued up to the upside, liquidity will be swept, higher supply will be mitigated, and 50% maybe will be mitigated, deeper region will be mitigated, and this will be functioning as liquidity for the upcoming shorts, right? So, but to take any long here, to execute any long after the mitigation of these demands on here, we need a strong change of character. So this high point has to be broken in order to create any movement right here after this mitigation. As I said, we are mainly aiming for short opportunities because pro trend is bearish, counter trend is bullish, right? So for bullish trades, we need a strong change of characters. This is our trading plan. This is how we trade, right? So this is the basic rule. We have to know this. Okay, so it was a demand reaction. Actually, price changed character to the upside, and after a character changing movement, it just literally mitigated this demand zone and started a way up. But this wasn't an entry opportunity for us because this high has to be broken in order to actually execute anything. Okay, strong character changing movement has happened to the upside. Here's a strong character changing movement. And my question will be here. Of course, we can only execute long trades. We can only execute long trades if price isn't coming from a supply zone. And the supply can be a 1 minute supply too, because, you know, for pro trend trades, if we are trading pro trend, the criteria, which is in the criteria of tracker and trading plan, which says that price isn't coming from an opposite sided zone. In a pro trend trade, this opposite sided zone means a 5 minute / 15 minute zone. In a counter trend, it means 1 minute, 5 minute, 15 minute, 4 hour, daily, any kind of opposite sided zone, right? Okay, so we have this zone right here, which has caused this strong change of character to the upside. So actually, if price doesn't mitigate any kind of supply zone before reversing into this demand zone, we'll be able to take a trade based on this demand zone up to some 50% or to this liquidity point, right? So if price doesn't mitigate any supply zone before mitigating this demand zone, we'll be able to take a long trade up to a supply zone or to the liquidity or to 50%. And yeah, I'm just telling you that lately, in the past few days, past few weeks, I'm using 2.5 pip stop loss because zones are literally too huge to be covered with 2 pip stop loss. And I just started to use 2.5 pip stop losses because it's much easier and you'll have a much higher strike rate. And yeah, I'm using the 2.5 and 3 pip stop loss lately because we have to adapt. So the target point will be this liquidity line here for 1:5 risk reward ratio. That's perfect. No, guys, this isn't part of the liquidity. What did we learn about liquidity? That equal candles next to each other isn't liquidity. equal candles next to each other can be considered as liquidity. This isn't liquidity. How do liquidity look like? Like this, right? This is liquidity. These are equal candles next to each other. Are you always use 50%? No, this is of course on equilibrium entry zones I'm using 50%. Majority of the time, 99% of the time I'm using 50% entry on equilibrium entry points. That's my trading plan. Yeah, this one below is liquidity, as I said. This is liquidity, of course. This has been built up for the shorts. But I'm just explaining that, guys, please just listen to me and stop texting in the chat. Just listen to what I'm saying. This has been built up for the upcoming shorts. And this is a counter trend trade. And this counter trend trade has a probability to play out after this liquidity point. And after this liquidity is getting swept, we'll be able to take shorts targeting this liquidity and the demand here. Because the main order flow is bearish. The counter trend order flow is bullish. So taking any long trades is being considered as counter trend trades. And for counter trend trades, we need strong change of characters. And if we are trading the counter trend, of course, we are going to have liquidity to take for the pro trend. And more likely, every single counter trend trade will be liquidity to take, liquidity to target for the pro trend trades. So here's the order flow shift, right? Here's the order flow shift. Price has shifted order flow at this demand zone. After this demand, the price will just change character here to the upside. But this order flow shift right here and this order flow shift will be liquidity for the main order flow when it's being continued. And then if the main order flow is being continued here, this supply zone, this will be the liquidity to target for us for the main order flow trade. Chaining markets, this was more likely a 5-minute zone tap too. As you can see, this is a 5-minute zone and this is a 15-minute zone too. You can actually easily identify higher time frame zones because this is the origin of the whole bullish order flow here to the upside. This is the origin, and every single origin more likely to be a 5-minute / a 15-minute zone. This is a 5-minute and 15-minute zone too. But guys, from now on, I won't read the chat. Sorry, I just have to go on with the backtesting session. So if price doesn't react on any kind of supply zone, and it's reacting, so we are deleting the order. Price has just mitigated the higher time frame supply and just swept the liquidity. Liquidity has been swept, as you can see. Here's the sweep above the liquidity. So liquidity is getting swept. And strong reversal has happened. As you can see, the liquidity has been swept into this supply zone, into deeper region of this supply zone. I will just right sweep here. I will delete this zone because this was just a sell trap. This was a sell trap zone. Perfect example for this sell trap. Lots of sellers open positions here on the liquidity line. All of these early sellers have been swept out, and early sellers have been swept out into the higher time frame, deeper region zone, right? But the 50% has not been mitigated yet. So this is -1 criteria. Obviously, this is -1 criteria, but the sweep has happened into this zone. So the liquidation has happened into this zone, and this is lining up with the main order flow. Okay, so, and the change of characters happened to the downside here too. Perfect character changing movement after sweeping liquidity into the higher time frame zone. Character changing movement has happened from this zone up here, right? This zone has started the inefficiency perfectly. Or we could say that this zone started the inefficiency. That I will just stick with the wiki zone because this started the whole character changing movement and these huge inefficient candles. Between this zone and this zone, only small inefficiency can be found. But this could be a good entry opportunity for us. This could be a really, really good entry opportunity for us because let me just track the criteria for this. Actually, this trade has a really, really high criteria. So I just want you to climb the criteria because I know the criteria, of course, because this is my trading plan. I have to know the criteria, but you have to learn the criteria too. So let's just count the criteria for this trade. Let's just count the criteria. So the base criteria, first base criteria, second, third, and fourth base criteria. We have all the 4 base criteria for this trade. What is the first? If you raise your hand, you can answer. Kaizem?
Higher time frame top.
Exactly. And please just say all of the others. All of the base criteria. What has it happened here? What is the second base criteria for us?
Liquidation.
Exactly. Liquidation into the zone, into the higher time frame zone. Perfect. Second criteria. Third.
And inefficiency.
Exactly. And fourth.
Pro trend.
Exactly. So we have all of 4 base criteria. After all, the 4 base criteria, we can search for the variable criteria, right? And well, you raise your hand, please answer the question.
Yes, the variable criteria. The first one is change of character.
Wait a minute, please. Let me just write all of these down. I don't know how many will be here. I will just write down 10. So the first one is change of character.
Change
exactly.
of character.
6.
The second one, we have strong reaction, V shape.
Exactly, perfect.
We
After?
have below liquidity to target.
Exactly, perfect. What else?
We have also, it is not coming from unmitigated zone.
Exactly,
Corrective pullback, strong brew.
exactly.
I don't know if we can consider it as 50% mitigation for the upper zone or no. I don't think so. It
No.
is
No, that was not
it's
a
not
50%.
mitigated. Yeah. So it's 99 criteria because a
Exactly.
combined liquidation. Yeah, we don't have the combined.
We don't have
liquidation.
combined liquidation yet, but if
Yes.
price creates liquidity for the zone, we will have combined
Yes.
liquidation and we will have the 10th criteria. So this looks pretty fucking promising, right? This is a really, really, really good trade. So I will just set a limit order on this zone. $25. I'm just checking the numbers. 25. Okay. Actually, this is just a tip from me. This is just a single tip. If I don't want to be missed out from the trade, and if I don't know if price will reverse on the 50% of the zone or it will reverse on the just the beginning of the zone, I'm just setting a limit order on the 50% and the beginning of the zone. I did this today too. That trade today was a miss actually, because it didn't even tag me in. But if I can't decide if the 50% or the full body will reverse price, and I just really want to be in the trade because this is a really, really high criteria trade, and I just want to fucking pull the trigger and I just want to be in the trade. I'm just setting a limit order on the 50%. I'm just setting a limit order on the beginning of the body, of course, with risk split. So with 0.5 on the upper one and 0.5 on the lower one, right? This is just a small tip from me, because if you are missing loads of trades because you are waiting for the 50% mitigation and you're just getting missed out from loads of trades because you are not getting tagged in on the 75%, 50%, etc. This is just a small tip. Of course, you will get less profit because if you are opening a position with 0.5% and not with full 1% risk, then of course you will get less profit. But that less profit is better and much more than zero profit, right? So yeah, this is just a small tip, because in this case, I really don't know that if price will reverse on the full body or the 50%, because the inefficiency will be filled up here. And if price fills up the inefficiency, this huge inefficiency, that will be at the bottom of this candle. And yeah, this looks like an equilibrium entry point. So I will just, I don't know, guys. Let's just see the 50% entry, because that looks the correct one right here. Okay. Actually, no, this can be considered as liquidity take. So this isn't combined liquidation. So this is a 9 criteria trade, a really, really, really strong trade, a really, really, really strong pro trend 9 criteria trade, tracked by your base plan, right? So let's see, price just mitigated the full body and reverse to the downside. Yeah, that's what I was talking about. That's what I was talking about. If I want to be in the trade and I want to make sure that I will be in the trade, I'm just setting a limit order on the 50% and then the full body too, because this is the safest way and best way to actually book profit. Because, you know, as I said, the inefficiency, this huge inefficiency has a really high chance that after this huge inefficiency is getting filled up, price will just reverse immediately to the downside. It won't come up to this 50% into the chance. And as you can see, that's why I said sorry, let me just close this. So that's why I said that I'm actually, in these cases, when I really want to be in the trade, I just set a limit order on the 50% and on the full body too. So yeah, if it would have been a tag on the full body, this could have been 1-to-13 restore ratio trade if it hits TP at this demand zone, of course. And this will be liquidity to take here also. As you can see, this is a liquidity to take point. Sorry, not liquidity to take, liquidity to target. This is liquidity to target this line. And if we are targeting this liquidity line, that will be 1 to almost 9 risk reward ratio. But if we are targeting the demand zone, that will be a 1 to 13 risk reward ratio. So this was a really, really strong trade. That's why it actually worked out. As you can see, in bigger percentage, these trades, these high criteria pro trend trades will work out. And in smaller percentage, these won't happen. But in the last few weeks, in the last 1 or 2 weeks, we had actually losses on high criteria pro trend trades, right? So we had losses on 11 criteria or 10 criteria pro trend trades. But these things happen. Actually, all you have to do is to keep repeatedly executing your edge, because if you keep repeatedly executing your edge, you're going to have a much higher win rate than you used to have before. Because we have an entry model. We have a really, really strong base criteria pro trend model. This model is literally the strongest out of this game, the strongest in this Forex game. Literally, I can tell you that this is the strongest model in this game, because this is just a systematic approach. This is the most systematic approach that can be found in supply and demand trading. I'm just telling you this because I just spent months and years of backtesting with this. And you know, I don't want to trash talk anyone else. I don't want to talk about other memberships, but other memberships, I won't name any, are using weaker entry models with basically gambling. But this isn't gambling. If these criteria are showing up on your screen, you pull the trigger. If these criteria aren't showing up on your screen, you don't pull the trigger. That's why I call it the strongest in this supply and demand trading game. Not because I just created this, but it's literally the strongest. Because other memberships, as I said again, I won't name any. I won't start the trash talking. I don't want to talk about names. Don't name criterias. Don't give criterias. Don't give a plan. And they just literally letting you to trade whatever you see and letting you actually execute bad setups too. And of course, those best setups will play out once, for example, from once in 10 scenarios. And of course, if it look perfectly good in your Instagram story and if it look fucking good that, oh my God, I just banked 1 to 50 risk reward ratio with this trade, which is actually a really small percentage win rate trade entry model and trade model. And, you know, out of 10 trades, it will work once and it will look really, really good in your Instagram story. But if you keep executing these criteria right here and this entry model, for example, you will have a really fucking high win rate. Because I was backtesting this scenario basically on the whole Friday and on weekend too. I was just backtesting this scenario non-stoply for weeks, months, almost a year now. And this is really, really strong and have at least a 60% win ratio. These criteria combined together, it has a 60% win ratio at least. And if you're just calculating, we are targeting 1 to 5 minimum, or TP is 1 to 5 minimum, right? And just calculate it with 60% win ratio, this 1 to 5. This is literally the strongest entry model in this game. But, you know, you have to gather data about these entry models and you have to train your eyes for these, because you won't just see these entry models every day. These are happening and being formed like 2 or 3 times a week, or 1 or 2 times a week. But if these are on your screen, if these are being formed 1 or 2 times a week, you will execute these flawlessly without hesitating. And these will play out perfectly 90% of the times. So yeah, that's it, guys. That's it, guys. I just wanted to tell you this because, you know, that's why I gave you this trading plan. That's why I gave you this actual criteria creating model and trading plan creating model and entry creating model to have this outlook, because literally this is the cheat sheet of trading. But, you know, enough of this talking. Let me just play price forward. TP. That's it. 9 criteria trade. Really, 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 really strong trade. Really strong trade. And TP hit. That's it. That's all you have to keep executing. That's all you have to keep executing, because this is the strongest setup ever. And yeah, what for the scenarios here? That if price creates change of character to the upside, of course, strong change of character, because this is counter trend. If you are trading longs, that will be counter trend. But if price changes character to the upside, that will be a long opportunity. We'll be able to target this liquidity line up here. But if price flips this supply zone, then we'll be able to take shorts to the downside, right? So price is currently inside of this demand zone. And yeah, that's why it's important to actually create a trading not plan. This isn't a plan, a narrative, trading narrative before every single session that, you know, I've explained this several times before. that if you're trading, if you're backtesting, you have to create a trading narrative before each session on the 5-minute, the 50-minute, and the 4-hour. That will be a narrative that will tell you that what could happen on charts, what could happen here, what happens if price reaches, for example, a demand zone, what are the outcomes, what demand zone could be reached in this session. If you are building these narratives, you won't be lost in the markets because I have a narrative for this demand zone. I know what to look for on this demand zone, and if this one of the scenarios will happen, then actually I'll be able to adapt based on the scenario that has happened out of the 2 scenarios. And if the strong change of character happens to the upside, I will be able to target the liquidity to the upside. If the flip of this zone happens, I will be able to target the 4-hour demand zone here, or some liquidity take point on the 4-hour chart, right? Or some 50-minute demand zone. This is a plan. So let's see what happens here. Let's just play price forward, ranging inside of this demand still, and the flip of the demand has happened. Flip of the demand has happened, as you can see, with a really nice movement. Let me just play price forward and check if it was really a break on the 15-minute chart. Yeah, on the 15-minute chart, it was a break too. On the 15-minute chart, it was a break too. And actually, I remember for this scenario. Yeah, I opened the position somewhere around here. So this will be a spoiler, but I remember for this scenario. This was actually a pretty fucking good scenario once again. This was a really, really high criteria setup and high criteria scenario. And I just remember that I booked really high risk-reward ratio on this trade because, yeah, this is June. I just booked really fucking high criteria trades in June. And the flip of this supply zone has happened. Price has broke below this supply zone on the 15-minute chart, right? So, as you can see, here's the supply zone that has started the order flow, changing and flipping movement. And price has just built up liquidity inside of this supply zone. Perfect liquidity is getting built up inside of this supply zone. So, this is a perfect continuation trade. I just remember that I took this live. Sorry, but you know, if we are backtesting, of course, there will be trades which I took in live. Of course, I will remember for these days because I'm backtesting these days on every single week, and I'm just trading live these days. So of course, I will remember for some of the trades. Actually, as I remember well, what the fuck is this? As I remember well, I didn't take this trade up here. I didn't execute this opportunity. More likely, I was missed out from this trade, but I wasn't recalling this scenario at all. So I wasn't remembering for this scenario, this price action at all. But this scenario right here, this price action rings a bell. And I know that price will trade this liquidity and will give you an entry opportunity on this supply zone, of course, on the 50% of the supply zone. And just a question that the question is that why can we use this supply as a supply zone, even if it's being mitigated? There's no inefficiency and this supply has been mitigated by this following candle. But still, why can we use this supply zone? I'm asking you guys, please raise your hand if you'd like to answer. Who is this? Well, please. Or me.
Sorry, I forget to remove my hand.
Okay, Milia.
Because we have a liquidity for that zone.
Exactly. If there's liquidity inside of the zone and there's no inefficiency, but there's liquidity inside of a zone which has caused, for example, a flip, caused, for example, a breakout structure, etc., etc., etc. So there's liquidity inside of this zone, then you'll be able to execute a position on the 50% of the zone because, you know, I explained this scenario several times before in webinars, recap videos, etc., etc., etc. I believe I even explained this in the recap video of this trade because I'm sure that I made a recap video of this trade. Wait, let me just check in Discord. Just a minute, please. Let me just check. Yeah, I made a video. I made a video about this trade. So yeah, and this is a perfect flipping scenario. This is a perfect flipping scenario that has happened. And I'm just reading the chat and there's nothing on the chat. So basically, price is following the main order flow. It's coming from a higher time frame zone. Liquidity sweep has happened, and it's just a continuation trade, right? But there's still the higher time frame tap because price has tapped this 50-minute higher time frame zone, flip this higher time frame. So this is a perfect flipping continuation scenario with liquidity creation, with pro-turn trade, with liquidity target, with aggressive pro movements, with corrective pullbacks, with liquidity to take right here. With inefficiency, there's no inefficiency because I just explained why can you use this entry scenario without inefficiency. And yeah, that's all I can say. All we have to do is follow the order flow and search a good demand zone that has not been mitigated yet. And if I take a look at this right here, this demand has been mitigated right here. Oh, we are here. So this demand has been mitigated, but this demand has been already mitigated by this, and the 50% have been mitigated also. So the next demand that we can target will be this one. Yeah, and this is a perfect target point, the latest point, last point of the liquidity. This will be the last point of the liquidity, but for just for curiosity, we will see that price, if price will tap the 4-hour zone too. Let me just switch back. And we are targeting this last point of the liquidity. So this demand zone is the last point of the liquidity, which is a perfect target point. This is a liquidity to take target point. And price is just creating more liquidity. This is a literally perfect flip scenario, right? So price is moving in a pro trend. Pro trend is this one, is bearish. It taps into a 50-minute demand zone, creates a rejection, flips this demand zone, creates liquidity for the flip zone, follows the main order flow. There's liquidity to take right here. Tapping into the supply, following the main order flow, liquidity to take. I mean, target, sorry. I'm always misleading these words. So yeah, this is the perfect flipping scenario. And the 1-minute supply was in a higher time frame. Yeah, the 1-minute supply was a higher time frame zone. This is even a higher time frame zone. As you can see, this is a 5-minute zone too, and even a 15-minute zone too. Yeah, even a 15-minute sell to buy candle. And if you like to, you can, of course, let me just clarify this. If you like to, you can actually confirm these areas. You can confirm these entries. You can wait for a confirmation inside of these entries. And yeah, that will be safer. But considering this price action, considering the extremely bearish pro trend on every single time frame, considering that there's huge liquidity to take for this trade, considering that the price is moving down, considering that this is liquidity to target for us, this is just a perfect scenario to not wait for confirmation entry. This is a perfect scenario for the risk entry. In these scenarios, you can use the risk entry actually. Yeah, mitigation happens. Price dances inside of the entry. Continues the way down. Continues the way down. Continues the way down. Comes back up because it's reacting on some sort of demand reaction, which you don't care about because that demand reaction will be part of the liquidity because every single demand on the 50-minute chart is being part of the liquidity. Here, as you can see, every single demand or wick or anything is being part of the liquidity. So we don't care about these reactional points. But we can look for scaling trades. Why? Because here's a new perfect liquidity to take. Here's a new perfect liquidity to take for us for a scaling trade. And actually, swing breakout structure has happened to the downside, of course, too. Here's a swing breakout structure to the downside. And if you can see a liquidity to take, if I see a liquidity to take, what am I always saying? That which zone has the highest chance to reverse this liquidity? If you raise your hand, you can answer this question. What am I always saying? Kaizen, please.
The closest.
Exactly. The next recent zone above/below the liquidity has a high chance to reverse the liquidity. I mean, reverse the sweep and continue the overall main movement order flow. And this moves on for the main order flow, right? So for the pro trend trades. So if we are in a pro trend trade, these are really good scaling trades. If we are moving in a pro trend order flow, so if 4-hour is bearish, 50-minute is bearish, 5-minute is bearish, 1-minute is bearish, every single time frame is bearish, and price is just creating this structure, these kind of scenarios will have a really high chance to be played out. That if there's liquidity, this liquidity, if this liquidity is getting swept, then the next recent zone will have a high chance to reverse price to the downside and continue the order flow movement. Of course, there's only one scenario when this won't be alive and this won't be usable, when the supply zone, the next recent supply zone is part of the liquidity also, but the supply zone part of the liquidity. So I will just set a limit order on this supply without any hesitation. We are using 2.5 pip. Yeah, I'm just feeling safer with the 2.5 pip stop loss actually, because I just tested it, and these days, in the past few weeks, or I can say past few months, candles are getting much bigger. So stop losses 2 pip stop loss can't really cover the whole zone, and it's safer to use 2.5 pip stop loss. But of course, you can still use 2 to 3 pip stop loss, anything between 2 to 3. But I'm just using either 2 pip if the zone is really small, or 2.5 if to cover safely the zone. So yeah. liquidity. Yeah, there was more liquidity, and all of the liquidity, triple taps, have been swept into the supply zone, 50%, and more likely there will be a continuation and session close. Yeah, session closed here. So the session has closed here. Let me just play price forward if it will hit the TPs. As I remember well, it will hit my TP. As I remember well, it will hit my TP. But as I remember well, there was an entry opportunity after the session too. Yeah, here's the entry opportunity, but it wasn't an entry opportunity actually, because this supply here is part of the liquidity, but we are not opening positions after the session is being closed and ended. But here was liquidity, same scenario, right? Liquidity, continuation, sweep, continuation, breakout structure, liquidity, continuation, sweep, continuation, breakout structure, liquidity, sweep, continuation, expectational continuation. But let me just see if price actually, yeah, it hits my TP. That's it. 1, 2, let me just count the 1, 2, 12.5 for the first. 1, 2, 9.5 for the second. And if you consider this as a tag, or we consider this as a no tag, let me just, I don't really care. This is a really, really good scenario too. I won't consider this because we did set a limit order on the 50% and not on the full body. So technically we was not tagged in the trade. So if you're just backtesting, and if you are setting a limit order, for example, on the 50%, and price don't reaches your 50%, then don't just move your entry to the body and don't just count it as a win in your backtesting sessions, because that will be false data. That will be false data, which won't actually help you. Just gather data about the actually backtesting results. And so if you set a limit order on the 50% and if you're getting missed out, this won't be a data. So you can just move it here. It will be a false data if you move it down here. So technically, this could have been a 1 to 13 restore ratio for us, but it has been a miss for us. And here we just booked, I can just count 22 restore ratio. So it was a 22 restore ratio plus 13 could be. So yeah, it was a pretty fucking good backtesting session with a pretty fucking good day. And yeah, as you can see with tracked criteria, basically, that's all. That's all for this session, guys. That's all for this session. I hope you liked it, and I hope it was helpful for you. I will just stop the recording right now.